Hey, beautiful people. Welcome back to Invested. Again, we're taking some questions, and there's a lot of questions for investors these days, is given the market. So I'm going to go ahead and read the question. Am I making a mistake of buying a Walgreens as an individual investor? I'm looking at purchasing Walgreens advertised around 6% cap rate. It's in a good location with small incremental rent increase every renewal period. I don't have a lot of experience in this industry, but I have a cash lying around in T-bills, just like bonds, that I'd rather put in towards something else if it makes sense. The lease is absolute triple net with no landlord responsibilities, not even roof or structure. What is my downside here? This will be a significant portion of my portfolio. Would I be making a mistake by buying this? It's a good question. This is what we call in the industry called STNL, single tenant net lease. I'm assuming it's a standalone building that has only Walgreens. So as you know, Walgreens, Rite Aid, CVS, these are all known in the industry to be a pharmacy, right? That's how they really generate. And if you go into Walgreens or CVS, everyone goes to the pharmacy, but there's ice cream, there's knickknacks, shampoos, beauty products. So usually Walgreens and CVS, typical footprint is usually it's about 6,000 to 10,000 square foot. 10,000 being a little bit larger in the Midwest. They're going to have 10,000 footprints. But usually the coastal areas, you're going to be about 7,000 to 8,000 average range. So on a 6 cap, every cap rate is different. But given Walgreens is stellar credit, you're going to really have a compressed cap rate. So even with the interest rate being high, with a solid investment grade credit, lenders are going to be a little bit more favorable. I do not know if you're buying this all cash with no financing, or if you're going to get some type of leverage and get financing from a lender. I'm going to assume all cash, just to make some points on some of your concerns. So this individual actually points out pretty good factors. So one is, it says absolute triple net. So in triple net, there's some other videos that we made, content like single net, double net, triple net. And absolute triple net is usually common area maintenance, property taxes, and insurance, all covered by the tenant. On top of that, this person was nice enough to even say roof or structure, because some triple nets like roof and structure are usually excluded from the tenant's responsibility. So this person doesn't really have to do anything. So what is the downside here? Well, there's always in investment, there's a downside. So before we talk about the downside, there's a few things I would like to clarify. So Walgreens is great. So you got to figure out how many years the Walgreens lease is remaining. So as an example, if they just built it and they just signed a 15-year lease, that's great. You have 15 years of term, what we call WALT, average, weighted average lease term. So the longer it is for such a credit tenant, the more valuable the asset is, because essentially if they're really investment grade, the longer the lease, people see that as more guaranteed lease. There's no guarantees in life, but because of their credit, essentially people see that as less risk, and they're going to pay for the full 15 years. The risk is, what if they have 5 years remaining? Well, some investors might say, 5 years is a very long time. But in real estate or commercial real estate, 5 years is really not that long. And usually the lenders will want a longer term than 5 years to ensure that their financing is secure. As an example, on the financing side, why they want to see that is because if there's 5 years remaining and you get a 5-year loan, by the time the tenant's lease expires, the loan's going to expire. But what if the tenant doesn't renew and they vacate? Now you're going to have a very, very hard time refinancing that property because you have no income, and the lender now has less credible or less valuable collateral for that loan. So usually if they're going to get a 5-year loan, they want 7 to 8 years remaining. If you have 5 years remaining, they'll probably want to give you about 3-year loan on it. So that's something from a downside risk you have to take a look at. Another thing is, as you heard in the news, Rite Aid is going to be closing a lot of their stores. So there's still that risk of Walgreens or CVS closing their stores. They're not protected by everything, right? There's certain Walgreens they're going to be closing down, such as CVS is too, because they really need about 2,000 square foot, a little bit larger, 2,500, to really maximize their primary business, which is pharmacy. Everything else is knickknacks, and people can buy that at Dollar General, Dollar Tree, Amazon. So there's a lot of competitors out there for those shampoos or, the beauty products and things like that, toilet papers. So their focus is pharmacy. So a lot of the areas that are not doing really well, they will try to close that down. And something we call, they go dark. So that's the risk here. So for instance, if there's still 15 years remaining in the lease, and we don't know what's going to happen tomorrow, let alone 3 years, 4 years, 5 years down the line. So 3 to 4 years into your investment, Walgreens decide they're going to close 500 location, and this happens to be one of the location. And you don't have to panic because they were still going to honor that lease of 10 years. So they're still going to pay you rent and your CAMs and property taxes pursuant to the lease, because your lease value might be $8,000, $10,000 a month. But I mean, they're billion-dollar companies, right? So they're not going to just default their credit ratings because they can't pay $10,000. They might approach you and say, can we do a buyout? And we'll pay you 30%, 20% of the value remaining today for us to walk away. And if it seems like you're a savvy guy, so you'll probably say, no, you have very good credit, so you have to give me 95% of the money up front before you can walk away. So that's how it's going to happen. So only downside here to me is essentially a couple of things. One, Walgreens have a catastrophic event and they go bankrupt, then, just like any business, you'll be a creditor. But because it's unsecure, because real estate is not a secure creditor, so, property tax, taxes, payroll, other creditor might be ahead of you. So that's one risk. But if you feel that Walgreens is not going to go bankrupt completely, and what other risk is going to be, they go dark. And there's other factors of going dark that's going to impair your property value. Number one, they'll pay your rent, but there's no one occupying your building. So then you're going to have a lot of loiters, homeless personnel, or people vandalizing the property. So now they're cannibalizing it. So everything you have in there is going to break down. So to replace a new tenant down the line is going to cost you way more money. And also, if you wanted to sell the property now, because of that issue going dark, people are going to only underwrite the deal and discount it based on how much years of rent is remaining, plus more because they can go bankrupt, right? So those are the risks you're taking. But a lot of firms out there, like DST firms, they like the single tenant net lease play because a lot of it is investment grade, and somewhat your downside is much more protected. That's why from a cap rate, it's still a pretty solid 6% cap rate, even with the interest rate these days. So those are some of the cautions that you should take a look at. But if this is going to kind of help boost your revenues and kind of diversify your a little bit more riskier portfolios you have, I don't think it's going to be a bad buy for you. But that determination. And if after reviewing this video, if you have any additional questions or comments, put it on the comments below, and we promise that we'll get back to you and try to address that comments to you directly. If you found this content helpful, please like, subscribe, share, and add comments. Thank you very much.